Welcome to Realcast, the weekly roundup of the real asset markets. My name's Richard Betts, and I'm joined this week by Dan Innes, Paul Strome, and Nicole Dines. Let's start with you, Nicole. What's your pick of the stories for the week?
Real asset media held a briefing on European debt finance and investment, and there was consensus among the experts that the private debt market has seen the crisis as a chance to widen its activities and take advantage of the liquidity in the market. They said the environment is very benign because obviously of government support, so there's a lot of liquidity, a lot of interest. But insurance companies, pension schemes, and so on are really taking advantage of the situation and offering competitive costs of financing. They said there's 130 billion euros a year of senior lending that will be retrenched. So there's a real opportunity for private debt investors to step in and obviously, make the European situation a bit closer to the US. In the US, 25% of the market is non-bank lenders. In Europe is well below 10%. Europe will not get to 25% anytime soon, but that's the direction of travel. And two other aspects they emphasize is one, the importance of choosing the right sector, because obviously everyone is very careful now about offices and retail, but there are opportunities in both sectors. So it's very important to know your real estate market. The other important point to emphasize is ESG, how important it's been. That it used to be a box-ticking exercise, but it's become absolutely integral and important and it's demanded by everyone, including from tenants to investors to lenders themselves. They're taking a more active role. Another thing which was very interesting this week in the UK was the Queen's speech, of course, where it set out government plans for the next Parliament. And there was what was called the biggest announcement for real estate, which is the new planning laws. Now, for decades, developers submitted planning applications for every single project they wanted. They had to be approved by the local council. Now, what the government is proposing is that should be simplified. And basically, all land should be divided into three areas. And land that is labeled as growth area, planning applications should just automatically be granted. It would also be digitalized, the process. So instead of being paper-based and very slow moving, it would be much faster. Obviously, the government's intention is to build a lot more houses to reduce great housing shortage across the country. And the government is confident of having this legislation passed because of the majority it has in Parliament. But it's likely to be opposed by a lot of conservative councils as well at the local level, because as Labour put it, it's a developer's charter. They're worried, obviously, about green fields and the countryside being spoiled and so on. So there's likely to be quite a battle ahead, but it's been hailed as a really significant step. Melanie Leach of the British Property Federation said it was one of the most significant Queen's speeches in recent history for the UK.
It was interesting, I think, also looking at that residential side. There was a lot of focus this week as well around inflation and particularly construction prices for residential here in the UK. Dan, what have you been following?
Well, on that residential side, I've been following the build-to-rent market and that sudden growth of BTR that's been fueled by demand from a rapidly growing rental market. Apache Capital has created a business division to help with the increased demand. And they've launched a £1.6 billion single-family build-to-rent platform to be known as Present Made. And that's going to develop, own and operate for the single-family rental UK home market. Apache said that the newly launched arm will deliver about 3,000 smart homes as part of its first phase, with a focus on suburban locations in the south of England. That's their second BTR platform, actually, after their £2 billion multifamily joint venture, of course, they have with Moda Living. Elsewhere around the country, Bruntwood SciTec is going to be the largest property platform dedicated for science and technology growth in regional cities. And so Bruntwood, they've secured a £95 million sustainability-linked loan. The group, which is a 50-50 joint venture between Bruntwood and L&G, they're going to use funds to invest in several of its ongoing developments, including Alderley Park in Cheshire and Manchester Science Park. So we've always seen this growing interest in science parks over the last 12 months. Lastly, turning it over to logistics, and Amazon, of course, one of the largest players in fulfillment and delivery. After they posted their net profit of $8.1 billion for the first 3 months of 21, more than triple the $2.5 billion it reported last year. But it comes as no surprise. The firm's continued its expansion into the UK shed market. It's rumoured to be taking a 411,000 square foot shed at Magna Park in Lutterworth. It was on the market at £6.50 a square foot. The building, which is owned by Bentel Green Oak, which bought it as part of a portfolio from Thor Equities and Morgan Stanley Real Estate for £303 million earlier this year. but it's the sort of inexorable march of logistics, really, from that Amazon story. And then we saw that New Look and Virgin Active have both had their CVA applications approved at the court. And I think we'll be following that time and time again. Not great news at all for real asset owners. And lastly, talk about alternative uses, Richard, but Selfridges are to convert part of its fourth floor into a wedding parlour. You'll be able to go to the fourth floor to get married now at Selfridges. So there's an alternative use for you.
Well, that's excellent. And that's kind of returning back to where things were about 100 years ago, where Selfridges had a golf course on the roof. I was interested also in terms of that Amazon story as well, Dan. I noticed that in Poland, Amazon had added 650 extra jobs there as well. So you can see Amazon really beginning to benefit from this across Europe. Paul, what have you been following?
The British Council for Offices has published a briefing note for its members, which suggests that the post-pandemic period is going to be an opportunity to change the unit of measurement for offices from square feet to square foot hours. That's pretty revolutionary for an industry organisation that's very much part of the office sector's establishment. The briefing looks in detail at the changing behaviours of office users that have occurred in the UK since March 2020 and assesses the permanence of the changes that have occurred. The focus is inevitably on home working and the way that previously office-based staff have adapted to working remotely and to the technology and working practices that have enabled what was originally a forced change. But actually, it does rather highlight how flexible people have been in terms of adapting to such a radical change. And it says the pandemic has really highlighted the people dimension of workplaces and also some of the technical difficulties, the regulatory difficulties, data protection issues, etc. If remote working is introduced as a choice, it will actually result in a more formal management style, it says, as all interactions will potentially be on the record. The BCO looks at different scenarios. One, a hybrid mix of home and central office working, while another is predominantly home working. The report's authors thus come up with figures that suggest a pre-pandemic 10,000 square metre office requirement could be reduced by between 2,000 square metres and 4,000 square metres, with more of a hot desking arrangement for those places that are retained. By shifting to measuring in terms of square foot hours, it will be possible to sell more square foot hours than square feet, BCO said. That's already sounding more like WeWork than Landsat. Well, the BCO says that space-time form will particularly favour co-working, as customers can have smart cards loaded with millions of square foot hours, which can be deducted automatically as a holder passes through an electronic gateway into the office. The move towards this type of model is unlikely to be a pandemic fad, and it is likely to be here to stay, the BCO says. In another item that will perhaps reveal longer-term effects of the pandemic, the city of Helsinki is holding a competition to find a design and development team to redevelop the city's remaining undeveloped dock area, which is called South Harbour. The site comprises more than 83,000 square metres of waterfront land, which is currently used as the port's terminal operations and parking. The city wants to locate 2 museums on part of the site, leaving the remainder for other uses, including a hotel, retail space, restaurants, and walkable public realm. The city said that the competition's launch comes at a crucial time for global cities emerging from the pandemic, as urban planners are challenged to strategically reimagine how public space will be best designed and utilised in the future, with a newly informed appreciation for the health effects of green and blue areas. So it'll be interesting to see what effect the change in context has on the proposals that emerge.
Yeah, it's going to be interesting, I think, to see how well-being and wellness and those kinds of things begin to influence design more over the coming years post-pandemic. This week, of course, in the UK, we can go back to hugging and kissing, Dan, and maybe that's Selfridges deciding to make an early bid for that and assuming there'll be more weddings coming up. Thank you, Dan. Thank you, Paul. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the key issues for real assets.